Exit algorithms. Scale smarter. Sell stronger.
Welcome to Exit Algorithms, the podcast where we decode what it really takes to unlock growth, streamline operations, and prepare your business for a high-value exit. I'm your host, Pete Vera, and today I'm excited to introduce Petar Posledovich. He's a licensed investment consultant, MIT-trained, certified in AI and machine learning and for finance, and the founder of Wolf Team Limited, an M&A advisory, capital raising, and valuations firm focused on Eastern Europe. Peter, excited to have you. Welcome to the podcast here.
Thank you for having me, Peter. It's also great to be joining you.
Yeah, absolutely. I'm excited to get into this. Do you mind starting off? Could you share for listeners a bit about your background and what led you to start Wolf Team?
Basically, I have a degree in economics bachelor's and a master of science in applied mathematics, mathematical modeling in economics, financial mathematics. And I have 15 years in the banking in Bulgaria, predominantly corporate and investment banking, working half of the time as a market and counterparty risk analyst, chief expert, senior expert also. And in the local branches of foreign banks like ING, wholesale banking, Unicredit, the Bull Bank, OTP Hungary's DSK Bank, and the last 3 years in KBC Group's United Bulgarian Bank. It's a subsidiary of the Belgian bank, the largest Belgian bank, second largest actually. After 15 years in banking, I decided to start my own firm, an investment banking advisory boutique, which offers mergers, acquisitions advisory, capital markets raising advisory, and corporate finance valuations, and also in the future AI modeling. I'm also trying to offer, and basically I'm working with small, mid-sized, and sometimes large corporations in Bulgaria and Eastern Europe, and also working with some Western Western European companies to help them raise capital and perform mergers and acquisitions advisory. That's basically it in a nutshell.
Yeah, wow, that's awesome. Big background in finance and a lot of industries that I'm sure help you with clients. Yeah, I'm curious, most of our listeners are US based. What are some of the biggest industries you work with in Eastern Europe?
I'm active in financial technology and artificial intelligence. I've also worked with the Spanish US based startups, so I have some experience with US startups and US venture capital firms, and also I contacted US private equity firms. So basically, I'm also trying to approach US investors also to finance the capital raising of the startups I'm working with. And so basically, I'm active now in financial technology, in artificial intelligence, also in last mile delivery, online merchandising, so to say. And also, I've been active in real estate, and I've been active in online merchandising also. So basically, AI, fintech, online merchandising, real estate, these are the main sectors that I have worked in.
Yeah, wow. Yeah, wide variety of industries. That's awesome. Your skill set can apply in a lot of different businesses, I'm sure. I'd love to talk about capital raising a little bit. When does it make sense to go for different types of credit, private credit, PE, or versus traditional bank loans? How do you advise your clients?
Basically, as maybe you have followed the news now, the private credit, private equity industry is facing some challenges because basically one of the benefits of going to private credit to the private equity firm is that the clients have been turned down by banks. They are not bankable, so to say, because they have to take out loans on very high interest rates, like between 7 and 15%, and banks do not want to deal with such high yield loans. So this is where private credit comes in with the big players like Blackstone, KKR, and the European EQT Partners Group, Texas Pacific Group, also in the US, RS Blue Owl. And for example, RS Blue Owl at the moment having some difficulties. They stopped redemptions from some of their funds. Blackstone also has limited redemptions. BlackRock has written down a loan to zero from 100% just three months ago for like 50 million. So there are some problems in the sector because the private equity, private credit firms have lent out at very high interest rates. And just if you take it like in units or in unique examples, for example, it's normal that one or two firms like Tricolor and other firms faced difficulties and they couldn't repay their loans like Market Financial Services, the MFS European mortgage loan lender, and they couldn't repay their loans and private credit firms suffered. That's true brands, Tricolor, MFS Financial Services. These were the last examples where private credit lenders face difficulties, had to write down their loans to zero and they just wrote them off because these companies went bankrupt. But the sector, I think one of the main things about the private credit sector is it's exposed to AI and to a large extent because in the last 7 years, partly to beat the market, partly because this is the next great thing. Private credit firms have lent tens of billions, if not hundreds of billions of money to AI, for example, data center build-outs, to AI, small and medium-sized technology companies, basically more mid-sized technology companies, and all this creates a bit of a concentration risk in AI. So I think private credit will really be hurt only when if the AI boom turns into a bust like a dot-com boom and bust, and if if an AI bubble exists and if it pops, then the private credit firms will really have to write down maybe not only tens of billions but hundreds of billions of dollars for the whole industry's value. So as long as the AI boom or AI expansion goes on, private credit and private equity firms should be okay, even though they have like these last unfortunate failures of True Brands, Tricolor, and Market Financial Services. There will be such unique and examples of companies failing just because they are over leveraged or there is fraud in some cases, but just the nature of the private credit business of giving out loans from 7 to 15% of interest rates predisposes for some failures. But the private credit industry should weather this okay, and they should continue to prosper, even though their stock prices have fallen like more than 30% from their peaks due to mainly such the last troubles of the sector. But as long as the AI expansion goes on, private credit firms will be able to make good returns on their investments.
Okay. Yeah, fascinating. I did some research too. I saw you write a lot of articles about this topic. So yeah, I'm really curious, so why is it happening? Is it because of the uncertainty in the market with the disruption of AI? Is that the primary reason, or is it have to do with other factors like global tension and political conflict or anything like that? I'm curious.
Yeah, first it was because of Tricolor and the Market Financial Services and the other unique failures of firms which private credit had large exposure, and because because there is usually the belief if there is one or two failures, there'll be more, and that's why investors first portfolio investors started running for the exits by selling the stocks of private credit firms like KKR, like Blackstone, like TPG, RS Blue Owl, EQT, the Europeans, and the Partners Group. And also some of the clients, some of the asset management clients, especially the high net worth individuals, started pulling out money from the funds. That's why one of the major events was Blue Owl OBDC fund halting redemptions. And this was everywhere in the news, and it further caused the stocks of the leading private credit and private equity firms to fall.
Yeah.
And for example, Blue Owl had to sell 1.4 billion of assets to North American pension and insurance companies to finance the redemptions. And lately, BlackRock, which is now top 5 with certainty in the world as in private credit, and they were expanding. They also wrote down, for example, $50 million loan to zero, when the same loan just 3 months ago was carried on the books at 100%. And all these Tricolors, big brands, Market Financial Services, Blue Owl halting redemptions, Blackstone halting redemptions, BlackRock writing off a loan to zero, all this caused the stock prices of the largest private equity firms first to start falling with Tricolor, big brands, and Market Financial Services, and then this was exacerbated by the Blue Owl halting redemptions, Blackstone halting redemptions. And now, finally, because people are worried that AI will disrupt software creation, software programming, and many mid-sized software firms, which are basically the bread and butter of private credit and private equity firms, investors started selling their stocks because they think AI will disrupt code programming and software programming. And personally, I think this is too much of a stretch to think that AI will disrupt to such an extent as investors maybe fearing the code development industry, software industry. But this is also, it was exacerbated by the fact that investors have made some money, not some money, large sums of money, large percentage against, and they wanted to protect their gains by selling off software firm stocks, and mid-sized and also large size. And last but not least, the AI sector to which private credit and private equity is exposed is worried that the so-called hyperscalers, Meta, Alphabet, Amazon, and Microsoft spending too much money. This year they're planning to spend around the four of them $600 billion on AI data center build out, and investors are worried first that their profits will go down. The hyperscalers' profits will go down. Second, they are overexposing them to the sector, and third, they could become asset-heavy firms, which are basically they are becoming by investing in AI data centers. And asset-heavy firms are carried by the market with lower multiples, lower price to earnings, lower price to sales, much lower than software companies, because the logic is if you want to build AI data center, you have to invest a lot of money, and it's much slower and stretched in the future return than building a software as a service product or web page like Meta, or software as a service like Microsoft Office or Alphabet, which is also a web page with huge data centers attached to it, like Meta's case up till now. But to be first in AI, they want to invest hundreds of billions of US dollars in AI, and Wall Street and other Main Street investors are worried that they are overextending themselves. So this is in a nutshell what caused the private equity and private credit firms stocks to fall more like close now to 40% from their peak.
Wow. Yeah. Fascinating. No, thank you for sharing all that. Really interesting. Yeah, and I know you're really involved in AI. You're really up to speed on all the latest. Where do you see it affecting, well, we can start with your industry first, finance. Where do you see it really driving change? There's a lot of hype as well. There's a lot of AI products that there's so many you can pick from, but where do you see it causing the biggest change in your industry?
Many analysts say that professional services, accounting, consulting services will be deeply changed by AI. I think it can help with menial tasks, and it can help with routine tasks, and thus provide more time to cater to clients and to service clients, which is basically why firms like mine and basically every firm exists, but to the professional service sector, this applies maybe to a bit higher extent, because the main reason we exist is to help clients realize value and to create value. And I also, with my firm, try to create sustainable value for all stakeholders who are touched by the transaction, and to create sustainable value for the long term and for all stakeholders, and not only for the client's bottom line, but also for its employees, their families indirectly, and for the whole community by creating sustainable value. And this AI could help with menial task, with automating some, for example, data gathering tasks, or it can help with financial modeling. There are the PKI firms, ChatGPT and Anthropic have hired former investment bankers to help them automate some of the investment banking tasks, and it's going along as I can see, and they can help. AI can help people like me, and also basically I think every firm achieve what it exists for, to service its clients better, and to create sustainable value. Especially for my firm, this is the main goal, to create sustainable value, and for stakeholders also to protect the environment. As you see, you have wind turbines in the back. So basically, we for all stakeholders, including the environment, I strive to create sustainable value, and other firms should also try to create sustainable value. So the business cycles get smoother, and there aren't huge crises before us. But so AI definitely is changing many processes in many firms, also in firms like mine. They help with menial tasks and data gathering and answering some questions. So AI is changing our environment, our world, so to say, and it remains to be seen to what extent this AI change that AI is provoking, to what extent AI can change the world, so to say.
Exit algorithms. Scale smarter. Sell stronger.